Okay, so have you heard of this company, Janover Inc?
Hmm. Not really, no.
Yeah, me neither. But their stock price just went like totally bonkers, up over 842%.
Whoa. 842%. That's huge. What happened? Did they discover a cure for something?
Well, no, not exactly. They're aiming to become like the MicroStrategy of Solana. You know, that
Yeah.
company that's super into
Well,
Bitcoin.
yeah, right. But what does that even mean for Janover? They're like, what, an AI real estate platform or something?
Right, and that's what's so crazy about this whole thing. That's exactly what we're going to deep dive into today.
It's like, how do you even go from real estate tech to becoming a Solana powerhouse? It's a pretty wild story, for sure.
So to get the full picture, we've got news from Globe Newswire, NBC New York, Crypto Slate, even PYMNTS.com chiming in on this. Plus, there's a really thorough value investing analysis report on Janover that we're going to dig into as well.
Yeah.
You can find all the links in the episode description, by the way, if you want to follow along.
Yeah, it's definitely worth checking those out. And what we're going to try to do is, like, piece together what's actually happening here, or cut through the hype and see if this is the real deal or just, like, a flash in the pan.
Right, because there's a lot of noise out there. Is this move actually going to work for Janover? What does it even mean for them? What does it mean for Solana? And like, honestly, what does it mean for anyone listening who's trying to understand what's going on in the market?
The big questions.
Big questions. We're going to break it all down for you. Don't worry.
It's one of those situations where you have to look at it from all sides. The market's going nuts. The new management's talking a big game. But we got to see what Janover's really all about, like, at its core.
So let's start with the basics. Chapter 1. What was Janover before this whole MicroStrategy of Solana thing?
Lay it on me.
Okay, so according to the value investing analysis, Janover's bread and butter was this AI-powered online platform for the commercial real estate world. Basically, it's like a digital matchmaker for everyone in that industry. Property owners, developers looking for cash, lenders, big and small, the whole shebang.
Ah, so they're like the eHarmony of commercial real estate.
Kinda, yeah. But it's not just one simple thing. They've got like a whole bunch of tools to serve different parts of the market.
Yeah.
Janover Pro, for example, that one links up borrowers with lenders directly. Then you've got Janover Engage, which is all about connecting those real estate syndicators with investors who have a lot of cash to throw around.
Ah, the accredited investor types.
Yep. And then there's Janover Connect. It used to be called Groundbreaker. That's a platform specifically for those syndicators to manage all their investor relationships and stuff.
Okay, so they got a pretty diversified set of tools, all targeted at that commercial real estate niche.
Totally. And that's why this crypto pivot is so surprising. A group of ex-Kraken execs, that huge cryptocurrency exchange, they just swooped in and bought a majority stake in Janover. They want to build a bridge between traditional finance, like Wall Street, and this whole DeFi, decentralized finance thing.
DeFi, huh? It's
Yeah.
like the Wild West of finance.
Yeah,
Exciting, but, risky.
for sure. Think of TradFi as like your grandparents' way of banking, all established and rule-bound. DeFi is more like, I don't know, your rebellious cousin who's trying to invent new ways to handle money using all this blockchain tech.
Right, I see. And Janover's trying to ride that wave.
Totally. And the guys leading this charge are like serious crypto veterans.
Yeah.
Joseph Onorati, he's now the CEO and chairman. And then you've got Parker White, he's the CIO and COO. And get this, Marco Santori, the ex-chief legal officer from Kraken, is on the board.
Whoa, so they brought in the big guns. It's a definite sign they're serious about this move.
Absolutely. And the heart of this strategy, based on everything we've read from Globe Newswire and NBC, is to create a digital asset treasury policy. And Solana, SOL, that's their coin of choice, this isn't just dipping their toes, it's like diving headfirst into the crypto pool.
So it's a pretty radical shift in how they're managing their money.
Exactly. They even plan to buy Solana validators and start staking SOL.
Hold up, validators, staking, what's all that about?
Think of validators like those referees in a basketball game. They make sure everything's fair and running smoothly on the Solana network. Staking is like you lock up some of your SOL to help support the network, and in return, you earn more SOL.
Ah, so it's like earning interest, but with crypto. Interesting.
And Janover's new leadership sees this as a long-term growth strategy.
Right, but why Solana specifically? There are tons of other cryptocurrencies out there.
Well, they're really into its speed, how user-friendly it is, and its potential for all sorts of applications down the road. They even said in that NBC interview that they see Solana as the foundation for a whole new high-performance financial system. It's a stark contrast to Bitcoin, which they see as mostly about security and scarcity.
Right, so they're betting on Solana's utility, its ability to do things, not just its value as a collectible.
Precisely. And you know what's kind of reassuring is that despite this whole crypto upheaval, Janover's core sauce business is going to keep on running. The founder, Blake Janover, and the CFO, Bruce Rosenblum, they're still running the show on a day-to-day basis.
That's good news. It means they're not completely abandoning what they've already built.
And their SaaS business isn't just sitting there either. In Q4 2024, their SaaS revenue went up a whopping 488% compared to the year before.
Wow, 488%. That's massive. And their annual recurring revenue, too, that jumped 194%. That's the kind of growth that investors love to see.
It's a good sign that their original business was already on a roll before this whole crypto thing came along. And they're not small potatoes either. Over 1 million users on their platform every year, hooked up with over 1,000 lenders.
And that AI loan advisor thing they've got,
Yeah.
apparently it helped facilitate over $25 billion in deals last year.
So they're definitely no slouches in the real estate tech world.
Yeah, they're a real player. But now it's like they're straddling two worlds, this stable, growing business and this super exciting but risky crypto venture.
It's a wild combination. Now let's talk about the people behind the curtain. Chapter 2, Management Evaluation. We've got the founder, Blake Janover, 15 years in real estate and tech, a real pro, and the CFO, Bruce Rosenblum, tons of finance experience, spent a big chunk of his career at PetMed Express. So they know how to run a business, that's for sure.
Yeah, they got the chops. But what about the new crypto team? What's their story?
Well, they come straight from the heart of the crypto world, Kraken, that massive exchange. Globe Newswire describes them as having deep digital assets and public market expertise. Joseph Onorati, Parker White, Marco Santori, these guys are like the A-team of crypto.
Right, they've been in the trenches, they know the game.
And they are all in on this strategic shift. They truly believe that we're at a tipping point where DeFi is going mainstream, and they want Janover to be at the front of that wave. In fact, they're super proud of being the first U.S. public company to go all in on a Solana-focused digital asset strategy.
It's a bold statement for sure. But what did the original founders think about all of this?
Well, from what we've read, they seem pretty optimistic. Blake Janover, in that Globe Newswire release, said he's really excited about the potential value this could bring to shareholders and that the SaaS business has a bright future with all these fresh resources. Sounds like he's on board.
Yeah, it's not every day you see the founding team so supportive of such a radical change. That's a good sign.
And when they say fresh resources, they mean it. NBC New York reported that they snagged $42 million through convertible notes and warrants from some of the heavy hitters in crypto investing. Pantera Capital, Kraken themselves, and Arrington Capital, they're all in.
Wow, 42 million bucks. That's serious cash. And they're going to use it all to buy SOL.
That's what they said, yep. They're putting their money where their mouth is.
No doubt about it. They are making a serious commitment to this strategy.
Now for the big question. Chapter 3, Financial Health. We already talked about that crazy stock surge, over 800%. People are clearly excited about this crypto pivot. But what are the numbers really saying?
Right, the market can be fickle. We got to dig deeper.
Agreed. So Q4 2024, their SaaS subscription revenue went up 488% year over year. Their total revenue for the quarter was up 80%, and that annual recurring revenue we mentioned, that hit over $800,000.
So their core business is in great shape. That recurring revenue is really attractive for investors. Predictable income, it's a good thing.
Exactly. That shift to recurring revenue is a key takeaway from the value investing analysis. Back in 2023, it was less than 1% of their total revenue. Now it's 23%.
That's a big jump. But are they actually making money yet?
Well, that's where it gets a bit tricky. They reported a net loss of $2.7 million in 2024. But it's an improvement from 2023 when they lost $3.4 million.
Okay, so they're still in the red, but at least they're moving in the right direction.
That's the hope. The value investing analysis says their gross profit margin is super healthy, between 87 and 90%. But their operating expenses are still pretty high, which is why they're not profitable yet.
Right, they're spending a lot to grow. But what about their debt situation? That's always a red flag.
Good question. They've got a pretty low debt-to-equity ratio, according to the analysis. And with that extra $42 million they just raised, their balance sheet looks pretty solid.
Okay, so they're not drowning in debt and their core business is growing, but they still need to figure out how to make this whole crypto thing profitable.
It's a high-risk, high-reward situation for sure. And speaking of understanding the market,
Feeling lost in the world of finance? StockAnalytics.ai can help. Our AI algorithms crunch massive amounts of data to give you the insights you need to make smarter investment decisions. Easy to understand reports, predictive analytics, real-time alerts, it's all there. So visit stockanalytics.ai today. That's StockAnalytics.ai and unleash the power of AI-driven investing. Make your money work smarter, not harder.
all right, so we've looked at Janover's business, the management, the financials. Now let's dive into Chapter 4, market sentiment. What are people saying about this whole crypto move?
Well, that initial stock price jump, that was a pretty clear signal. People are definitely paying attention, and they seem to like what they see, at least initially.
But is it just hype?
That's the million-dollar question, isn't it? One thing that's got everyone buzzing is their goal to become the MicroStrategy of Solana. That's not just some random aspiration. They're trying to emulate what MicroStrategy did with Bitcoin.
Yeah, that whole buy a ton of crypto and watch your stock price soar strategy.
Exactly. And NBC New York mentioned another company, a Canadian one called Sol Strategies, is trying to do the same thing, but with Solana.
So Janover's not alone in this gamble.
Not at all. But, Solana's way more volatile than Bitcoin. It took a big dip in price in 2025, and that's something investors need to be aware of.
True, but there are also some big players like Grayscale and Franklin Templeton who are filing for Solana ETFs.
Right. That's a good sign. If those ETFs get approved, it could mean a lot more institutional money flowing into Solana, which could stabilize its price.
Yeah, it's a balancing act between high risk and potential high reward.
And right now, it seems like the analysts are still scratching their heads. The value investing analysis said there isn't much analyst coverage on Janover yet. And what's out there is probably outdated because it doesn't factor in this whole new crypto strategy.
Makes sense. It's a whole new ballgame now. Their old valuation models probably don't apply anymore.
Nope. It's going to take time for the market to digest this change and figure out what it all means.
Now, let's move on to Chapter 5. Ownership structure. Who's actually calling the shots at Janover now?
Yeah, who's steering the ship?
Well, Globe Newswire reported that the ex-Kraken team bought a big chunk of the company, like 728,000 shares of common stock, plus all the Series O preferred stock. It's a pretty concentrated ownership structure now.
Wow, so they're really in control. That can be a good thing if they're aligned with the interests of other shareholders, but it can also be risky if they decide to go rogue.
You've got a point. But they've also shaken up the board of directors, brought in Joseph Onorati, Parker White, and Marco Santori, all those Kraken guys. It's a clear signal of the direction they're heading in.
It's like a changing of the guard. But the founder, Blake Janover, and William Carrigal, they're still on the board, right?
Yep, they're sticking around. It's good to have some continuity there, some connection to the original business.
Yeah, that institutional knowledge is valuable. Could it help smooth the transition?
Totally. Oh, and one last thing. NBC reported that they're changing their name to DeFi Development Corporation and getting a new ticker symbol. It's like they're shedding their old skin and becoming a full-fledged DeFi player.
They're going all in.
No doubt about it. Okay, now for the part everyone loves. Chapter 6. Risk assessment. We've got to be realistic here. There are some serious challenges ahead for Janover.
Okay, let's do a classic SWOT analysis. Strengths, weaknesses, opportunities, and threats.
Perfect. So starting with the good stuff. Strengths. Janover's got a solid AI-powered platform. They're operating in a growing market. They've got a good network in the real estate industry. They've got a strong team with experience in both real estate tech and crypto. They've got cash in the bank from that recent fundraising, and their debt is low.
Yeah, not a bad starting point at all. But what about their weaknesses? What are their Achilles heels?
Well, they're not making money yet. That's a big one. They haven't had a lot of institutional investors in the past, and they're still a pretty small company in terms of market cap. And let's be honest, they're newbies in the crypto world. That lack of experience could come back to bite them.
True. Integrating a traditional real estate business with a brand new crypto strategy, that's not going to be easy. There are going to be bumps along the road, for sure.
No doubt. But let's talk about the opportunities here. They're playing in the PropTech, Fintech, and InsurTech spaces, all hot markets with lots of potential. They could be a leader in using AI for commercial real estate finance. Their platform has the potential to benefit from network effects as it grows. And the Solana and DeFi space is still young. There's a lot of room to grow.
Right, and they've even hinted at licensing their AI tech to other companies. That could be a lucrative revenue stream.
Definitely something to keep an eye on. Okay, now for the not-so-fun part, the threats. They face stiff competition in their existing markets. The regulatory landscape for both fintech and crypto is, well, a bit of a mess right now. No one knows what's going to happen next.
And let's not forget about the volatility of the crypto market. Solana's already taken a hit this year. It could easily happen again.
For sure. And those convertible notes they issued, those could dilute the value of existing shares. And at the end of the day, this whole thing hinges on the success of their crypto strategy.
Which is a big unknown. It's a gamble. And even beyond the crypto stuff, there are risks inherent to the prop tech world in general.
Like what?
Well, the real estate market is cyclical. It goes up, it goes down. That uncertainty can affect Janover's core business.
Yeah, makes sense.
And keeping their technology up to date, that's a constant challenge. Plus, there are all those legal and ethical questions around data privacy and AI algorithms, making sure they're not discriminatory, all that stuff.
Right, and the threat of cyber attacks is always looming. Plus, there's the risk of bias in their AI tools, which could have unintended consequences.
Yeah, there's a lot to think about.
For sure. Okay, time to wrap things up. Chapter 7, our conclusion. Janover is clearly in the middle of a major transformation.
A real metamorphosis. And it's either going to be brilliant or a total disaster.
It's a high-stakes game, that's for sure. But hey, high risk, high reward, right?
Exactly. If their vision pans out, they could become a major player in both the real estate tech and the DeFi worlds. But there are a lot of ifs along the way.
So, what should our listeners be watching for?
Keep an eye on their profitability. Are they getting closer to making money? How's their core SaaS platform doing? Is it still growing? And what about Solana? Is their staking strategy working out?
And what about those regulatory changes? Those could make or break the whole thing.
Absolutely. It's a fascinating case study, really. We've got this traditional company diving headfirst into the world of DeFi, led by a team of crypto veterans. It raises a big question. Will Janover actually pull this off? Will they really become the micro-strategy of Solana? Or is this just a wild swing for the fences that's going to end in a strikeout? We'll have to wait and see.
Lots of intrigue there. If you want to stay on top of these kinds of in-depth analyses, make sure to subscribe to the Stock Analytics AI YouTube channel. We'll keep you informed.
And just a reminder, folks, everything we've talked about today is for informational purposes only. It's not financial advice. Do your own research, talk to a financial advisor if you need to, and remember that AI played a role in our analysis today. Invest wisely, everyone.
Stay smart out there.